Major mainland China indices are all in the red as rating agency Fitch says a bond default in Russia is imminent because of the country's financial isolation following its attack on Ukraine. Meanwhile, the Russian ruble has gained some ground after heavy losses. The currency has fallen more than 40% against the dollar since the start of the year, making it by far the worst performing emerging market currency this year. Analysts expect it to depreciate further if sanctions on Russia's energy sector are expanded. US President Joe Biden has announced a ban on Russian oil and other energy imports, and the barrel of oil hit its highest price this week since mid-2008. Yasmina Sabawi reports.
Russia is a top oil and gas producer and holds tremendous power over the world's energy supply. And a disruption somewhere has ripple effects everywhere. As fighting rages between Russia and Ukraine, U.S. petrol prices have shot up 11% in the past week alone.
Since Putin began his military buildup on Ukrainian borders, just since then, the price of the gas at the pump in America went up 75 cents. I'm going to do everything I can to minimize Putin's price hike here at home.
The U.S. is the world's #1 oil producer, and it's releasing 30 million barrels from its reserves to ease the pressure on Americans. At the same time, President Biden has banned U.S. imports of Russian oil, which made up 10% of the American market last year.
Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine.
While the move is largely symbolic, conflict and sanctions raise global risks, and prices at the pump reflect that. To try and further blunt the rising costs, U.S. officials flew to Venezuela, a staunch Russian ally and major oil producer, to discuss an increase in its energy exports. Washington, however, hasn't had diplomatic ties with Caracas since 2019, when this embassy was abandoned. Nor does it recognize Nicolas Maduro as the president.
Como le dije a la delegación,
as I mentioned to the U.S. delegation, we have all the disposition to advance with an agenda that promotes the well-being and peace of the people of our hemisphere, the region, the Americas, all from the diplomacy, respect, and the maximum hope for a better future.
Concern is also mounting about Iran's crude oil exports as talks between world powers and Iran on its nuclear program hit a snag. Russia is demanding U.S. guarantees that sanctions won't impact its trade with Iran. And Biden is reportedly traveling to Saudi Arabia soon to request a boost in oil production, something the White House has yet to detail. Yasmina Sabawi, TRT World, Washington.
Let's get more on this now with Susannah Streeter in Bristol. She is an investment analyst at Hargreaves Lansdown. Thanks for being with us today. So I actually want to start with this, Susannah. We've heard the US has banned oil imports from Russia. Will Europe be able to do the same thing? I mean, it's very different for Europe. It's very, very dependent on Russia. Would it be able to find alternatives?
Absolutely. I mean, this move by the US is the biggest domino to fall in this strategy of further isolating Russia and weakening its economy. For Europe so far, Germany has been resisting such a move. Britain has said that it will end imports by the end of the year, but Germany is so reliant on gas in particular, getting around 40% of its energy needs in terms of gas from Russia. So it would hurt extremely hard. And I think that's why you saw the DAX in Frankfurt fall dramatically yesterday in the last few days, has recovered today because it doesn't look like, as yet, Germany will follow suit and there will be an immediate knock-on effect of other European nations doing the same as the US for now. But certainly it shows the winds of change that are blowing. And this is all designed to reduce the amount of revenue that Russia can make from its oil exports, highly dependent on that. Of course, it could try and sell that oil that it won't be now delivering to the United States onto other markets, but it's likely to have to sell it at a big discount. So already this move will weaken Russia more financially.
Right, and then a question then, sorry, on the Russian economy. You said obviously it will weaken. We've seen the ruble falling 40% against the dollar in a year, and now Fitch is saying that its bond default is imminent. What does it mean?
Well, what we've been seeing is Russia increasingly isolated from the international financial system. And one of the biggest moves was actually to freeze the reserves of Russia's central bank. Now, this was the war chest of foreign reserves that Russia had built up to try and insulate it from the worst effects of the economic sanctions. Now it's not able to dip so easily into those reserves. Finding it extremely difficult. Banks have been cut off from the SWIFT international payment system. We've had a whole raft of different payments organizations saying they're quitting Russia for now. All of this is putting extreme pressure on the ruble. Recovered a little today as we're kind of in a bit of a holding position, but certainly it's going to be very difficult for Russian companies and also the Russian state to be able to service its debt.
Susannah Streeter, thank you for this analysis.